There's one setup mistake that I see real estate investors making that forces their CPA to rebuild their entire books come tax time. And that's just wasting time for everyone. And it happens before even the first payment of rent comes in. And it's all in how you've set up your expenses inside of your QuickBooks chart of accounts. So today, I'm gonna fix that. And I'm gonna rebuild your chart of accounts straight from the IRS playbook. And there's one 8825 line that most real estate investors get wrong. And I'll go over that at the end of the video. But I set mine up from the IRS form 8825 as a blueprint, mapping each expense line to my QuickBooks. So my P&L is almost complete come tax time because my CPA will just take it from one spot and plug it in, and it's done. I first picked up this idea from Income's Digs. That's another YouTube channel. They pretty much said like map your chart of accounts to your tax form, and I'll show you exactly how here in a little bit to do that. But in this video, they made a small tweak on the property management line that saves you a lot of time come the end of the year. The expense lines are organized, and I'll show you by the way the IRS expects it. So couldn't quite get this to pull up together, but this right here is the form 8825. I don't know if I can zoom in at all. I cannot. Oh, there we go. All right. So we got, starting from the top pretty much, you got advertising. If you advertise auto and travel, for auto and travel, cleaning and maintenance right here. I got property insurance. There's insurances right here. I don't put commissions because I don't really need commissions as a rental property. Property related professional fees, property taxes. We got taxes right here, got utilities right here. And then of course repairs, definitely gonna need that. Business insurance is separate for me. I don't put business insurance, obviously, because it's part of your business. It's not in a specific property. Same with shipping. Those are expenses. So I put everything else as cost of goods sold because that's specific to a property that I'm, renting out. So, that's a cost of goods sold in my opinion. There's several ways to set it up, but that's just how I set it up. And this is exactly how the IRS is going to want to see things, and it's just so much easier to copy and paste it and make sure that you're compliant with everything, really. But that's the main thing that you're going to want to do. Now, what I was talking about earlier, the property management thing that a lot of people get wrong is they'll put it in other because they really have no idea where to put it in, and they'll put it like right here for the tax deal. But I like to put it in related professional fees because you're hiring this out. You're hiring someone to handle your property. That's a professional that you're hiring, so that's a professional fee in my opinion. And so that's where I put it. I put it as a subcategory of property related professional fees. And then any other related fees that you might incur, I put right here in the other sub account. That way I can see how much I am spending on property management on the profit and loss sheet. It makes it just so much easier. Now your QuickBooks expenses match the IRS line for line like this, and meeting your tax prep is cleaner, faster, and less expensive really. But you're wanting to just make sure that you can make things as easy as possible come tax time. That avoids you wasting time, trying to figure out what things are. It avoids your CPA having to ask a ton of questions and going back and forth with you. Because especially during tax time, they're not very easy to talk to, the CPAs, which is understandable. But you'll notice that I don't have them, like utilities 123 Main, or utilities 34 Oak. I don't have my chart of accounts a ton of lines showing all of my my properties. I don't have a big old long list of chart of accounts. You don't want your chart of accounts to be really, really long. You know, and on top of that, if you end up getting a ton of properties, you know, I think QuickBooks caps you out at 250 lines of cost of goods sold. So you have to kind of, you know, take control of that a little bit. So how I do it is I use track classing. I'll use generic accounts like I showed you, and then I'll go deeper in with the class tracking. But I'm not going to go over that in this video. I'm going to go over that in this one right here.